Feeling like a shark in a shrimp tank. Big fish, small pond in the shrimp tank.
Hey everyone, this is Mark Scribner. I'm your host of the Shrimp Tank with my co-host John Warner from Link Ventures here today. I'd like to remind all our listeners you could find this show, all our shows on the shrimptank.com/Boston. You can find us on iHeart. You can subscribe to YouTube up there, basically anywhere that you can get your podcasts. You could follow us across the entrepreneurial universe. We have an amazing guest today. His name's Kevin Bennett from MotoRefi. And one of the cool things, John, that we all learn when we see business plans and great companies is this concept is so straightforward, but it's exploded in a very short period of time. Literally has gone from 0 to almost 150 employees very, very fast, but very awesome concept that it's like in that, like, why didn't someone else kind of figure this out? But Kevin and his team are obviously executing at a very high level. With that said, John, I'd like to have our listeners just learn a little bit about what Link Ventures is and why Link is such a great company.
Sure. We're a venture firm that backs amazing entrepreneurs, and you're going to meet one of them. And I think that's all the marketing I'm going to do for today. I can't wait to introduce you to Kevin Bennett. He's a total rock star.
Awesome. Kevin, hey, thanks for coming on the show today. We appreciate it. And like we just mentioned in the intro that MotoRefi is your company. You're in the MotoRefi space, and very short order you went from I don't know how many number of employees, but now up to over 150 in short order. Could you tell us a little bit about what your company does, and also just to mention to our listeners that John's the CEO of MotoRefi?
No, Bennett, Kevin Bennett.
I'm sorry to say Michael Bennett, Kevin Bennett. Yes, I just talked to Michael. I apologize.
That's all good. Mark and John, thanks so much for having me on today. So MotoRefi is a software platform, and we're a fintech, a mission-driven fintech startup. And what we do is make it easy to save money and improve your financial security in the context of your car. Most people's cars aren't doing them any financial favors. Most people actually get their car, through the dealership. That's been the case for a long, long time. And unfortunately, a lot of the deals most people are getting at the dealership, whether it be on that interest rate or those dealer insurance products, are more expensive than they really need to be. And so what we do is we help people and make it easy doing it online, but help people refinance their auto loans into more affordable auto loans, save consumers money, and also more affordable insurance products like gap and warranties that they would often get at the dealership. And we save people on average $100 a month on their car payments. So real money for folks, groceries, gas, stuff for the kids, and have an NPS that ranges from 80 to 85, 81 at the moment. So happy customers, make it easy, and help them save money.
So Kevin, Mark drives a Mercedes G-Wagon. I drive a Honda Pilot, and my 18-year-old drives a Jeep. We love our cars. Why do you think a lot of people don't realize that they can love their cars by refinancing and taking good care? And the fact that a lot of people don't realize that they can give give some love to their budget through your amazing service. What do you think the opportunity is for you guys to grow and grow, tremendously?
John, it's a great question. I think when most people think refinancing, they think about mortgage, they think about their homes. And refinancing your home is one of those financial life events. And most people think about their, personal finances, and they think about their financing their education, buying their car, buying their home, refinancing their home. But to your point, refinancing your car is not a life moment in people's finances for the most part. It has not existed in a popularized way. It's certainly possible. Most people can save money. By our account, 80% of people can save 2 to 3% APR on average doing it. So 80% of people who drive off the lot can save money on their financing. 100% can save money on those insurance products. So it's widely beneficial to consumers, but there has been a lot of advertising around it. And if you think about awareness, only 47% of people are aware they can refinance their car. So the majority of people don't even know that it's a possibility. And as a result, you see 15 to 20% of mortgages get refinanced, but only about 1 to 3% of auto loans. And so it's a tremendous opportunity to help people save money, to help them optimize their personal finances and improve their financial health. And that's where we come in. And we come in not only to make them aware of it, but also to make it easy. And so we partner with great financial institutions like credit unions, community banks. And so we only show you the best offer of all the offers that we see from our partners. You'll see that offer in seconds, firm offers of credit within 90 seconds, and then we'll handle the tough part. So we'll help you collect all the documents online. You can text them in, you can email them, you can upload them, and we even save you the trip to the DMV. So we make it a 21st century digital transaction, and we help people save money doing it. And that's really the mission we're on and what we're doing.
Kevin, it's amazing when you think about like how, not to insult you in any way, but it's such a basic concept that no one's paid attention to like you have. And when you think about the complexity of a mortgage, for example, and appraisals and all this, but could you speak a little bit about like the potential market size? I mean, obviously we know how many cars are out there all the time, probably more with COVID, but how big is this market space for you, do you think?
It's pretty enormous. So the size of the auto loan market is over $1.2 trillion. So similar size to the student loan market. And to your point, you think about the just enormous number of student lending startups there are out there, and they're just very few in the auto space. And it's just an underserved space that has a ton of opportunity. And so we think you can, when you look at the percentage of people that refinance their car, refinance their homes, if you refinance your car, you refinance your home, you should absolutely refinance your car. So we think there is a 10x market opportunity here, and that we think refinancing your car should be every bit as commonplace as refinancing your home, more so because more people own cars than homes.
Can I have a quick follow-up with that? Typically when you see a changing interest rate environment like we've had in the past 10 years, in the mortgage space, people have refinanced multiple times. They have closing costs and things like that. Do you see this being a one and done type of thing, or when you actually work with someone as interest rates change, obviously different vehicles, multiple vehicles, but in theory, if someone is in a high interest rate environment, they could refinance with you multiple times?
Absolutely. We absolutely have repeat customers, whether that be because they're refinancing the same vehicle for a second time or refinancing multiple vehicles in their household.
I love that you can eliminate the DMV visit. That's huge. So Kevin, dealerships don't always have the customer's best interest in mind because they're not helping them out on this. I'm curious, what is under the hood? What's the how are you using data and matching to kind of be able to do something that the dealership isn't doing? And could the dealerships get wind of what you're doing and just take this service on and eliminate your competitive advantage?
It's a great question. So to go under the hood a little bit, it's a tough business at the dealership because the margin on cars is so thin. The margin on a car is about 2%. And so the dealership's making most of their money on those F&I products. They call them finance and insurance products. And that's where the dealership really needs to find those profit centers to make that business work. Unfortunately, that's not necessarily the best for the consumer. And so when you think about what's best for the consumer, how do you help the consumer save money and help them with their finances? The best move is almost always to work through the financial system after they've driven off the lot, after the dealership, after they've gotten the car. And that's where we help them out. And it's really important. And to your point around data, part of what we have is this matching marketplace. And we will take in a large amount of data, and the consumer, we ask for as little from the consumer as possible. Just a few pieces of information they'll provide online. And with their permission, we pull a number of other data sources. We gather as much data as we can by a third party and by API. We'll do the soft credit pull. And then we can then get all the information needed to pre-qualify that customer. And then with all of our lenders, they'll all have slightly different criteria. They'll have a different credit box. Maybe they'll specialize as someone a little bit higher FICO, a little lower FICO. They'll have different hard cuts around delinquencies or charge-offs, whatever the case may be. And so in our blended credit box that includes all of our lenders and pool of lenders, we then can take the data from that customer and match them with the best offer seamlessly in seconds, all on our platform. And so that's kind of the magic for really both sides of our marketplace. For the consumer, it means we get them the best deal and we do it faster. For our lender, we're actually 2 to 20 times more efficient than any of our competitors because our approval rates are higher and our funding rates are higher. We're only sending consumers to that lender who we know qualify for the offer. And so it makes it more efficient for the lender and more efficient for the consumer, and everyone wins.
And so basically what you're saying is because the margins, like the space that you never really or can't foresee yourself being in is like the new car purchase. It's really refis all the way.
We've had a tremendous amount of success with refinancing. It is really easy for the customer to do, and we see, you know, I don't have a perfect crystal ball, but we see ourselves moving forward and continuing to grow and expand the current space in refinancing for a long time.
Go ahead, John.
And if someone improves their credit score over the life of their car, can they take advantage? Will that help them take advantage even more of some of your services? And I'm also curious, the profile. I think of Gen Z is pretty digitally savvy. You got these coupon cutter type people. Who's the ideal kind of target for your customers? You know, as you think about growing.
It's a great question. I think for the first part, absolutely, which is as you continue to make payments on that vehicle, you get a natural lift on your credit score. So the more you pay down your auto loan, the less risky you are anyway. And you're also probably improving your credit score as well. So all reasons to think that over time, you're going to be able to qualify for a better rate, a lower rate, and a lower car payment. So absolutely, it's another aspect of why it makes a ton of sense for people to really just check their rate and see. I mean, you can check in 30 seconds and find out, could you save money on our site? And we don't need your social security number. It's really straightforward. We don't ding your credit. Very easy. So it makes a ton of sense for people to at least go to motorrefi.com and check it out and see if they can save money, because most people can.
Well, I was just curious. I mean, you've been involved in a number of successful startups over your career. You have an MBA, highly accomplished. This has scaled up really fast from lots of different reasons. What are some of the challenges? You know, what we like to say here on the show, it's where street smarts and book smarts collide. With growing so fast in short order, what are some of the things that kind of have surprised you over this quick arc that's happened for you?
Well, you're very kind. I think nothing in life moves in a straight line. I think so that there are always surprises and curveballs. I think for us, the growth has been incredibly gratifying and really exciting. But scaling to meet that growth is a challenge. And that is a challenge for any high growth startup. And so I think for us, it means scaling the teams, scaling the systems, everything. The human brain's really good at thinking linearly, but when you're looking at nonlinear growth, that breaks. And so the thing you think you need in 6 months, you probably need in 6 weeks. And so it means focusing on leverage and focusing on how do you get more leverage out of yourself, out of your team. You have to reinvent your role every 6 months. Everyone on the team, myself included, because the company changes and grows so quickly. You mentioned some of the growth of the team. We went from 50 to 150 people last year, almost all during COVID, almost all remote. So onboarding people remote, training people remotely, interviewing, obviously. And these are things that all startups and companies are really adapting to this new normal, and hopefully temporary new normal, but really working through that. So growth of the team is a big piece of it. That's been the biggest challenge, and we're, knock on wood, been really fortunate that we have a very strong culture, a very mission-driven culture, and so I think there is a positive and virtuous signaling in that, where we attract the types of folks who want to work. We often say, good people doing great work. And so want to work with good people who are really highly motivated, highly talented, and are making a real impact in the world. And so we've been fortunate to be able to attract those types of folks.
Mark, you mentioned MBA. Kevin also went to Brown. I think that's like one of the hardest schools to get into. A lot of people are jealous of that. He has a JD from Georgetown. He was a speechwriter for Governor Warner for Virginia, and he worked in the Obama administration. I mean, this guy's done it all. And I know you this is your 5th startup. What are some patterns that you've seen in doing the startup gig, and how have you maintained culture and a commitment to diversity over the last year? I mean, I feel like this is a science fiction movie or a Twilight Zone episode that just keeps going on and on and on. How are you? You've grown like 300% the last year. How are you doing that and building for the future?
John, it's very, very kind. I think one of the interesting things about being an early stage founder or CEO is there are certain things you can kind of apprentice for. There are certain, you can have experience in product, you can have experience in marketing, you can have experience as an engineer or in sales. Fundraising is not one of those things. You just haven't done it until you've done it. And one of the things that I think, probably took me a little bit of time to learn, honestly, was what's the right approach? What's the right approach to fundraising? And it's kind of like a dance where no one teaches you the steps and you just figure it out as you go along. You probably step on some toes and aren't the best dance partner at first, and hopefully you get a little better at it over time. And I think we've been able to do that. But, one of the things about fundraising, and I think that's true of hiring as well, actually, which is it's more about discovery than persuasion. So thinking about whether it's finding the right match as an investor or a member of the team, say an executive hire, it's about finding the right fit. And so if you approach it from that mindset, as opposed to, me trying to convince someone that I am the best in sliced bread, which I am not. Sliced bread's pretty great. Then it's a different orientation in the conversation. And it's about understanding what is that person on the other side of the table or the other side of the Zoom screen, what are they all about? What are their motivations? What are their goals? Right? And then understanding your motivations and your goals, and is there a fit there? And in particular with fundraising, that means when you're chatting with an investor and you're having that, getting to know them and having that first conversation, you're not asking them for money right away. You're asking them how they think about your space. Do they have a thesis on the space? Why are they talking with you? What's their interest level? What's their sweet spot in terms of stage, check size, those types of things? Understanding their motivations and understanding really their approach, and then understanding, hey, is that a fit for our approach, for example, or what we're looking for? Because, I think a recipe for frustration is trying to change people in many contexts of life, but certainly changing their goals or motivations is one of them, whether it be an investor. If you're raising a seed round and you're talking to a fund that usually does Series B, it's just probably going to be a tough set of conversations around their expectations, what they're used to, and what you want. And I'd say the inverse is also true. If you're raising a Series B and you're talking with a seed fund and expecting them to write the size of a check that would lead the round, that's probably also not in the model that they have. And so just understanding your potential partner and what their goals are is really, really important in fundraising. And that's something I think it took me a little time to learn. When I started, I thought my goal was to convince everyone I met that I was the best person that they should invest in, and that we were the best team and we were the best company. And I think the reality is there is a discovery phase before that in qualifying yourselves as partners that is critically important.
So to summarize that, to know your audience is to maybe just make that boil down is, know who your audience is. Could I maybe just follow up? I think it's synergistic because you're talking about partnerships and investing. I know that MotoRefi has a lot of ancillary services that you started at the same time. So you hear MotoRefi, you just hear that. But I'm curious about the other services that the company offers. And then maybe your methodology of how you think about those partnerships. So does it apply to the same way that you apply people that invest in your company?
It's a great question. And I think we think about the refinancing in terms of knowing your your partner, and in this case, it's the customer, knowing what that customer journey or experience is like. Customer will go to the dealership, and in the last 15 minutes of the transaction, they'll get a big stack of paper, and the monthly payment will get circled, and they'll sign, and they'll want to drive off the lot because they just want to drive home in their new car. Oftentimes, they didn't read that stack of paper, and they won't read that stack of paper. They won't necessarily know all the products that they were sold as part of that transaction. And so we know we can save you money on your loan. And part of what we try to do is help understand ourselves. Can we save you money on those other products you got, the gap or warranties? And also help educate you, because we can save you $100 a month on the refinance, but maybe we can save you $1,000 on those insurance products, in addition to the $100. And so we are consultative in how we kind of both educate and understand what the customer situation is, and we want to help them obviously save as much money as we can. And so that's been our approach from the beginning. And obviously the refinance is the thing that the consumer is most familiar with, and in the fact that they have a loan. And then it's about kind of, hey, do you know what your other products are? And let's walk through that journey together and see if we can help optimize your finances with those products as well. And when you think about partnerships, whether it be around those products, whether it be with our lenders, whether it be with our partners in acquiring customers.
Kevin, you mentioned the word partnership a bunch. Curious to know, what has been the partnership with Capital One and SoFi to date? And then, this show is broadcast in 16 cities. If someone's listening, what's a dream partnership that you want to go to the next level? Because I know you're not satisfied with staying in place, and you got big ambitions. And then I have a bonus question. I know your dad was a famous agent. Maybe you could say a little bit about how that informed you to be the amazing CEO you are today.
Yeah, absolutely. So in terms of partnerships, and this will go a little bit to the discovery piece and the matching, which is really understanding what are the goals of your lending partners, for example, and do they want to grow the number of auto loans they have, right? If they do, we are a perfect partner for them. We can do it cost effectively and profitably for them and efficiently, and take a lot of the headache out of it. If they don't, then we don't want to kind of take up their time and want to make sure that we're efficient. We're happy to educate them about it, but want to understand what the goals of the lenders are. At the same time, if you take a partnership on the customer acquisition side, if there is a neobank or a PFM or an auto insurance company that wants to provide an incremental value that's adjacent to the value they provide, say helping save people money on their auto loans and refinancing those, then we're the right type of partner to chat with around that. So I'd say if you're a partner listing and this has piqued your interest and you're interested in learning more about it, you can email contact@motorrefi.com. We will get back to you. And part of this space, this is, John, thank you, the way this happens a lot, because many folks are not as aware of auto refinancing and the opportunity there. And I guess on the last piece with my dad was I call it a non-tech entrepreneur. So is not a traditional, built a piece of software or hardware in his garage, but he, went to law school. He never practiced law, but ended up getting into real estate, getting into some different investments, and becoming a sports agent. Before, there were corporate firms that did this. It was, he just kind of, and the way he did it is the way entrepreneurs do a lot of things. They just start with one player they represent.
Jerry Maguire.
Yeah, start with one, right? Or you start with, one townhouse if you're a real estate investor in your first, property, and then you go to 2 and 3 and 4, and like a lot of things, if you can build a good reputation, there's a lot of word of mouth value, and I think that's how he really built. He never did anything in a major kind of corporate way. It was always kind of very entrepreneurial, and was able to be successful doing so.
I have a couple questions. Oftentimes, a lot of the CEOs, the entrepreneurs that we get to work with, they have people sometimes in the early stages trying to wave checks at them just to take them out, or um, do you ever think about that? Like at some point, like if somebody comes waving $1 billion at you, like what does the team do, or how does that come into your thinking?
It's a great question. I think making sure you have clarity of thought around these things is really important. And I think that's my recommendation for anyone, whatever your goal is, making sure you have clarity around that goal, that you have those conversations with your board, if you're a founder or CEO, and that there is alignment and communication around it. I think the last thing you want is to not have had those conversations or thought about it, and then have something come in inbound, whether that be a term sheet or whether that be an acquisition offer or a SPAC these days, as things go. And I think making sure that you're working from first principles, being thoughtful about what makes sense for the business. It is an incredibly hot market, a historically hot market. Just because you can doesn't necessarily make it the right thing to do, as we know in many contexts of life. And I think that's true today. So if you were to normalize for a market, what makes sense for you, what's the right thing for your business, make sure that you're on board with your stakeholders, including your board. And then the decisions become easy because you have a clear playbook and framework that you can kind of run against whatever that opportunity is. And you can very quickly qualify it as an opportunity that would make sense for your company or not make sense for your company. And that would be my recommendation. It makes conversations really easy when those things come up.
Mm-hmm. John, we have time for one more if you have another question.
Sure. What are other companies you're watching? I mean, I know, Geico and Lemonade, there are companies that have positioned themselves in such a way to try to capture the customer's imagination. I think MotoRefi can become a verb, and people could do other financial transactions and say, I want it to be as easy as what I did with MotoRefi. I think right now you're building demand because people didn't even realize this existed. But I think if you fast forward, there could be a new normal of how this is done. But I think you might need to take some playbooks out of some other companies. Just curious, as a CEO, you have responsibility not only to make sure you don't screw up the day-to-day, and Bob, your CFO, is a college buddy of mine. He loves working with you, but you got to kind of chart the future. Just how are you doing that to make sure you hit it big?
It's a great question. And we can always learn from each other, I think, as different companies and folks that came before us and our contemporaries and folks that go after us. But I think if you think about consumer asset classes and you think about student lending had its SoFi moment, for example, where really that became transformative for digital and student lending. And then in mortgage, there was this Better Mortgage moment, right? Rocket Mortgage, but Better. We really admire the approach they've taken to really invest in the entire value chain and to really develop a better solution for consumers from soup to nuts. And we've been really impressed with them. They're obviously a great business and have grown incredibly and are a couple years ahead of us. We've been very, very impressed with them. And I'd say lastly, Credit Karma. I mean, Credit Karma really normalized this idea of credit scores and checking your credit scores and doing it online and making it easy. And that wasn't an easy online digital 21st century thing you could do. And Credit Karma did such a great job to create that experience in that moment and then help consumers understand how to improve that credit score. So there are a lot of great companies out there, and we certainly are fans of them.
Kevin, we're about to wrap up. We'd love to have you back just to hear the evolution. The astronomical growth that you've had in very short order is very impressive. For our listeners, just to remind everybody, you can find the show on the shrimptank.com/Boston, anywhere on the internet. We'd love to get your followership. Kevin, what's the best way for our listeners to learn more about MotoRefi?
Mark, thank you for having me on the show. MotoRefi.com is our site, and contact@motorefi.com is a great way to get in touch with us. And we'd appreciate the interest in the outreach. So please don't be shy.
Hey, Mark, I have one last question. I've heard that Winnebagos are, those big caravans are popular during the COVID. Are you finding more people are asking to refinance that class of a car as they kind of go off the reservation or move to Iowa or Wyoming?
It's funny. I think one is an entirely separate conversation on the future of cars and COVID and what that's doing in auto, because there's a boom and it's really exciting, of which, one aspect you named. But we get everything from, Porsches and Teslas to RVs and Toyotas and Hyundais and Fords and everything. It really is the whole gamut, and it's just an amazing privilege to be able to help everyone because so many people can save money on their financing.
That's great. Well, thanks again, Kevin. We appreciate it, and congratulations on your great success.
Mark, thanks for having me. John, great to speak with you again. Thanks for having me.
Thank you.
I've been feeling like a shark in a shrimp tank. Big fish, small pond.